Hello, everyone, and welcome to lesson 3 on option flow. This is Kevin. I go by Market Monk Picks on Twitter. It's a new Twitter account I set up. And in this lesson, I want to talk about ETFs and, in particular, how I use ETFs as part of my strategy for buying options on stocks. You can buy options on the ETFs as well. So I'll talk about that. In particular, though, there are a couple of things in the flow to keep in mind with ETFs that I hope is useful to you. Before I get into that, I want to talk a little bit about what ETFs are. So ETFs are exchange traded funds. They're basically a basket of securities that trade like any stock does, and there's a number of different types I'll go over. They contain all types of investments: stocks, commodities, bonds. Some are U.S. only, some are international. They're a really good investment asset just to put in long term. I mean, SPY or QQQ has performed really well in recent years, and it's a kind of low maintenance investment strategy. But with respect to options, these do offer options, and they do have option flow that you can track. And some of the major ones that you might be familiar with are SPY, which is the S&P 500, QQQ, which is NASDAQ, so a lot of tech stocks. And then there are some individual sector ETFs that you can follow. So there are materials, XLB, financials like bank stocks, XLF, real estate, IYR, XLE is an energy ETF, JETS is one for airlines. So there's all kinds of specialized ones that you can look at as well. Some are, there's ones for commodities like corn, coffee, natural gas, anything you could really think of there. Currency ETFs, and then inverse ETFs, which I'll be talking about. And these inverse ETFs, they, in simple terms, they go up when the market's going down. So they're like a collection of shorts, essentially. And if you were to buy calls on one of these, like UVXY or SQQQ, if you were to buy a call on that, you would make money as the market goes down. And I'll talk about a couple scenarios where I might use those. I'll provide a link in the description if you want to learn more about ETFs in general. So as we look in the flow here, my filters are essentially in some ways opposite of what I had in lesson 1 and lesson 2, which is where for the emojis, I'm just looking at ETF and index. I still have leaps crossed out, but I want to see those, because I want to see what's going on with these. Now, I will say the flow on these is it's a little harder to read than for an individual stock. Something like SPY has so much volume and is so heavily hedged that you can't always get a clear picture of what's going on. Whereas if you're in an individual stock like AMD or NVIDIA or Apple, you might be able to get a clear picture. So what I do with SPY is, I'll just take it and look at it. I do actually have, we can just put ask only on here and kind of see what's going on. One thing I want to draw your attention to is that these options trade after the market closes for 15 minutes. So you get this 15 minutes extra of option activity on SPY and QQQ and a few others. And it's sort of interesting to note, I sometimes we'll do a quick scalp in that last 15 minutes if I see that SPY really sold off heavily into close, and if the chart looks like it might bounce. If I'm going to hold overnight, that might be when I buy. It's just something to watch, and something I didn't really even know about until I was trading for several months. So I want to draw your attention to that first. Okay, so let's take a look at this. This is SPY of orders of $30,000 and up, and you want to set the numbers kind of high with something like SPY or QQQ. Okay, so I go in here and looking fairly bearish in the next couple of days. Now, does this mean that we're going to have red days? Not necessarily. I mean, SPY changes quickly, and this is sort of the sentiment going into close. Who knows what Monday's going to bring? If futures are really ripping, then they'll load up on calls. Some of these are hedges from positions they already had, so it doesn't exactly give you a real full picture. But I do actually on these like to go ahead and look at all of it. So I'll take the ask side off, start to look at the bid side, and you can see here the picture kind of changes, and we actually get into a more bullish position. This is because these large whales are selling a lot of puts, which is a bullish position, which might indicate the market might go up. It might indicate it'll be choppy, and they'll eat up some premiums. But it's something I do study. Now, in particular, SPY isn't really one I use for my overall more focused stock positions. So I want to take you to one that I do actually use a lot. So this is XLE. It's an energy ETF, and very important for oil stocks. And I'm going to take you through a position I had on Friday and how I used XLE in relation to that. So I had a couple positions on Oxy during the day on Friday. So I had two. I had one that I had held overnight. I had done a trade sort of in this range here. It was a small gain. And I decided to just let a few contracts ride into the next day. You can see it ended up pretty favorable. I added a few more, I think around this dip here, and and then cashed out, not really at the top, but on the way up. Not that good with charts, but I do okay. All right, so then as I watched during the day, we had a big sell-off in oil here in the mid-morning, and so at this point I started to monitor the flow to see if anyone was buying the dip on Oxy, and the whole situation started to look pretty good, like we might get a little bit of a reversal during the day. But in addition to checking Oxy, I was checking the flow on XLE, and you can see that this ETF, and this is these purple stocks here, these are all oil stocks, and they all sort of did the same thing. This is Continental, CLR, Marathon, and so to varying degrees, they all had this dip and started to rebound. BP to a lesser extent. I had been in Oxy just because my flow read from the day before showed it looked pretty favorable. So I was going to re-enter that one if the situation presented itself. So okay, so XLE, I noticed the dip was corresponding to both of those. So in the flow, in addition to checking Oxy, I did check XLE, and this is going to have some of the afternoon stuff in it. So it's not exactly what I was looking at, but if I were to go on to the ask side here and go, to show charts, the heavily bullish here, and this is for through November and especially into mid-November. This is a wide disparity. So what does that tell me? Well, it tells me that if I enter an oil position and can get in at a pretty good spot, that I have some backing from that ETF. Oxy is in it, and it reveals a lot about the market sentiment about oil stocks at that moment. So here, as it started to dip on this 5-minute chart, I noticed that the RSI is pretty low. So I don't try to catch a knife, as they say, because it can go much lower than this. But when I started to see a little bit of a reversal here, I began to scale in, and then I did the last of my buys around here. This is crossing this thick red line is a Hull average, and the thin line is called the Wilder's average, and I can cover that in a later video. Technical analysis is I'm not as strong there as I am with option flow. I'm learning, but again, this consolidation here was gave me some confirmation that this was likely to go up as the momentum and the option flow kept building, as they kept buying the dip, and I kept seeing all these calls come in. And I can go back a little bit, and 30,000 is a little high for XLE, so can lower that a bit. And so what I was seeing, here. So this corresponds to that dip we saw, and activity on it, really started to pick up. It was heavily bullish on the ask side, so it was a good opportunity for a day trade. If Oxy had dipped, and even if I saw some calls coming in, if XLE had continued to sell off, I probably would not have entered that trade. I look for that confirmation from the ETF. So whatever sector I'm in, I try to look at an ETF that matches up to that. So here's another example with Jets, and I want to talk a minute about a trade that didn't work for me, that I ended up bailing out on. So American Airlines, let me see. Okay, yeah, this is the one. All right, so American Airlines, I saw it sell off in the morning, and you can see, this RSI is really low. And so I started to look in the flow if there's going to be an opportunity here. And I bought around this region here. And as you can see, it fell apart. I hit my stop loss, and that was it. And same with Jets here, sold off, started to try a little bit of a recovery, and then sold off some more. So that was a failed trade, but it doesn't mean that I'm just going to abandon airline stocks. These have been selling off pretty hard all week. Timing the reversal is tough, of course, but as I go into the flow here and take a look at what Jets was doing throughout the day, and I might have to go even a little lower. It's a smaller ETF. Okay, so yeah, the flow was bad, and this was as they started to buy some calls. I saw these sweeps here, and it seemed like a good opportunity to enter. You're not gonna win them all, but if I wanted to enter any airline trades, I would want to see Jets show a little life. And as I look at this, I can see it's still pretty bearish. So I might be more hesitant to enter any airline trades. And in fact, I had a pretty tight stop loss on, whereas with oil, I was jumping in several times last week, and I caught a few run-ups on MRO, and each time I kind of had that backing of the ETF with me. So when I'm entering a trade, just in summary, I try to make sure to look at the ETF that's linked with it, and you can track that in the flow as well. Financials, XLF. Okay, so let's take a look at that. I had a few good trades on bank stocks last week, and each time, I tried to look at what the flow was doing. And so here, I'll actually go a little higher with that, 10,000. And let me see here. And you kind of play with these numbers. You want to get a pretty full screen, I would say. You don't want to have just 5 transactions on there and try to make any judgments based on that. Okay, so here, banks had a really nice run after earnings, and what we can see is that the sentiment was fairly flat on contracts through the end of the month, and then it tipped slightly bearish. So in a situation like this, I would probably not swing any options on banks when I see a picture like this. Whereas with oil, and I mentioned I held some Oxy overnight. I did that with several oil stocks, and if XLE is looking like this, I have more confidence to hold overnight than otherwise. I might. On a number of these sectors, you're going to get opportunities throughout the day, even on a red day, to catch a scalp, or you could just play. You could play puts. I don't play a lot of puts, but you certainly could do that. In any case, you look for a favorable setup in the ETF that's linked to whatever stocks you're looking at. Now, I want to talk just for a minute about these inverse ETFs, and my preferred hedge is UVXY, and there are a number of these you can look into. SQQQ or SDAO, those are some other good options. Okay, so this is called ProShares Trust Ultra VIX Short-Term Futures ETF, and I always recommend researching anything that you're gonna put money into, of course. But in simple terms, when the market is turning red, this goes up. On Friday, we had a lot of Thursday after hours tech earnings that were mediocre to bad, and those stocks fell. You may have seen Snapchat fall, and Facebook and Twitter, and some others. And so in any case, we were going to open red, and so it was a good day, potentially to look into something like UVXY. And I had a hedge on this that I built up over a couple of weeks. And if we look on the day chart, we can see that this has been, as we're in this market rally over the past several weeks, I mean, this has been going way down. But if I'm holding calls overnight, it's worth it to have a hedge. And a very simple hedge for me is to have a few monthly calls on UVXY and to take some profits on that where I can. And you see that we did get we got a pretty big spike here. But when you're looking at it in the flow, notice here that buying a call is bearish. So you have to just reverse how you think about it. And buying a put would be bullish. Okay, so we have that. All right, so we look at the flow here, and we can see it's mixed overall, but into next week, we can see slightly bullish here. And it's over the bearish. You see the strikes break down. And so what does that mean? Well, that doesn't really tell you a whole lot right now. That much like SPY and QQQ, we might be looking at a slightly red market, but there's no definitive direction here. So I bring this up, more just to say that these inverse ETFs, they're really good to look at if you're looking for a simple way to hedge. I don't short individual stocks personally. I'd rather kind of go with the momentum of the market. I think we're in a pretty bullish market still. But if you're looking for a hedge with fairly cheap contracts, UVXY is a pretty good option. All right, so I'll close by talking about the whale alerts with respect to ETFs. I don't often play these alerts, and a lot of people will just kind of filter them out. Like you see here, we had a SPY put get alerted on the 22nd, right before close, and this is for late November. Decent volume. When I look into it, I can see that 10 of the big option trades, we have bought puts and sold puts that are bullish. So it doesn't really exactly give you a clear direction. If I were to enter SPY, which I do sometimes, I'm looking more at the price action during the day. And when I would want to enter SPY, I do take a look at the intraday flow to see what's happening. And it's like, so you get a big drop here, and this is a 5-minute chart. You can see the relative strength index is very low. So this is going to go up. I'd be pretty confident about that, but you kind of don't know how much. It might go up a little bit and then go back down again. So it's not a guarantee, but the best time in my experience to enter SPY is when you get a big sell-off for calls or kind of a euphoric run for puts, where you can see the RSI getting out of this purple range. I avoid entering it when you get this sort of choppy price action here. So the option flow for me is still pretty useful confirmation before I'll enter. I'll want to see some large whales stepping in and buying calls. So I always do have a tab set up for that. So let's just take a look here. This was at around 10:40, 10:45. And if we go back to SPY in the flow, go back here, and let me get some bigger orders, go up to like 50,000, and I'm going to be scrolling through a couple of pages here. This is such a massive stock. Okay, so all right, 11:30, and okay, yeah. So on the ask side, I don't see a lot of activity that jumps out at me. Although we do get into some pretty big orders here. So if we even go up to maybe 100,000 and see what they were doing, and you can see some of these orders get into the millions. Okay. All right. So so there was some activity here. This particular one was part of a multi-leg play where they're buying and selling a put. So you can see that this is a hedged position. Doesn't really tell you a whole lot, but you get a block like this where they're calls on the ask side and the volume exceeds the open interest. So again, this is a little bit of a different process when entering an ETF than entering an individual stock. With stocks, I'm watching the flow first and seeing what pops up intraday according to my filters. You can see that in lesson 1. Whereas with SPY, I'm more playing the price action and then looking for some confirmation in the flow. SPY is always going to have volume, relatively speaking, compared to some other individual stocks where the volume might dry up, it might sell off as a result of that. SPY is going to have that. So I look for some volume, some decent volume spikes, which is what is going on down here. You can see there was some major sell pressure. I'm looking for a reversal on that. And if I were to enter, I'd want to see a little bit more than this, maybe this whole cross here, and then I might enter if the option flow is favorable. So just to recap, ETFs, exchange traded funds, really important when you're wanting to enter individual positions. It's not financial advice, but I really recommend that you account for the sector ETF that is linked to what you're trading. And just for one more, we had a big run on some small caps the other day with like DWOC and Food and all that. If you trade small caps, an ETF I would look at is IWM. And when you see, excuse me, this I have these auto lights in my office. So when you see a big sell-off in IWM and SPY, and both of these sold off at the same time, it's a time to really be cautious about some of your positions and entering day trades, especially on those really volatile small caps. So you want to try to find an ETF that's linked to your trades in small caps. IWM is a good one, and you want to keep an eye on it as you enter those individual positions. Now, you could have a small cap that doesn't really care about this and it's just going parabolic. But for me, when I'm looking at overall market conditions, the activity in these ETFs is going to help determine when I enter a trade, and maybe more importantly, how long I'm going to stay in one. So when I had these oil trades and I saw XLE, the flow was looking really good and the behavior of the ETF was strong, like early last week, I might be more likely to keep something overnight in those situations, as long as the flow was looking good. And then again, big sell-offs a lot of times can give you some nice scalp opportunities. You can see a major sell-off doesn't necessarily indicate a big reversal here. It started to recover a bit on Thursday, and then and then sold off some more, and then a larger reversal happened. So to trade safely, monitor your ETFs. Consider having a tab open in the flow that just looks at those, and learn the ETFs that are linked to the sectors that you trade in. And that is part of the recipe to really start to string together some successful trades. So I want to thank all my new subscribers. I want to thank everyone for all the support you've given me and in the comments. I'm planning a few more of these. So as long as there's kind of an appetite for it, I'm happy to share what I've learned. And I wish you all the best. Everybody have a great week, and I will see you in the next one.